Hemindra Hazari is also with us right now. That's a pre-open session. G. Chokalingam is with us as well. Hemindra, you saw the numbers from the PSU banks that we were talking about. Any thoughts?
The numbers are far worse than what the analysts were forecasting. Because this is the state of the underlying credit portfolio. Now, you say Union Bank, for example, they're saying that 75% of the iron and steel exposure is stressed. About 50% of that exposure has already become a NPA. Now, mind you, it's very interesting to see that as of December end, when total credit in the non-food sector was growing by about 9.2, iron and steel exposure was still increasing by about 9.5 or 9.6%. That means that even on a highly stressed sector, the bank lending, at least till December end, is continuing at the normal growth rate of the overall industry. So which tells you that, what is the state of the underlying sectors that are performing. And this should be a wake-up call for all those who are discovering green shoots in, whether it be two-wheeler sales or, what have you, that the underlying deterioration is continuing in the entire industry. And this is also being mirrored in some what we are finding in the new private sector banks. So I think this whole idea of green shoots also may need to be reviewed.
In terms of stocks, Hemindra, is there any, at some price, things you'd say are factored in? What's the price? Union Bank is, I think, trading at 0.3 times book. Bank of Baroda at 0.8 times. Now, how do these numbers make a difference, if at all, you think?
See, actually, what this means is that either there is deep value here, or that and this is what the market is sensing, because today no analyst on the street, no fund manager is willing to give a broad call on buy PSU banks, because that's what the valuation really demands. The concern has always been is that the results which are coming out are far worse than the analyst expectations. And that is what is, I think, causing the apprehension on the street. And that is why no one is willing to stick their necks out to give a buy call. Although on the face of it, I do agree with you. They look, extremely compelling cases to invest in. But the point is that I think investors who had entered such stocks are, got themselves very badly burnt. And this is even the case with now private sector banks, that the asset quality is coming out worse than what the analysts were forecasting. So the question is, what do you buy?
Yeah, but the difference is, stocks like Yes Bank are making new 52-week new highs, all-time highs. And some of these public sector banks are at the other end of the spectrum. So there is a huge difference, right?
The difference really is that, which I've spoken to you about earlier, is that the finance sector has a very high weightage in indices.
So people can't.
So you cannot ignore it.
You
cannot buy PSU because the results are so bad. No analyst on the street is very convinced. So you have to keep buying the very few private sector banks which report profit increases. Now, how far that will continue, one has to wait and see.
Sure. Choka, but even so, Bank of Baroda, I think from their February results is up some 40%. It's
on book value, I would like to.
Would you say there's downsides, meaningful downside from here? If somebody holds it,
a substantial downside in my view, if you go by fundas, because if you adjust a net NP outstanding, the price to book value is a little more than 2 times for both Bank of Baroda and Union Bank, so which is too costly, 100% premium.
Okay, so market starting 16 points higher and 47 odd points higher on the Sensex right now. What do we have? Asian Paints, Tata Motors, ITC, Reliance Industries. But let's put the bank stocks up first. So let's start with Bank of Baroda and then move on to others like Union Bank, Allahabad Bank, Central Bank, etc. BOB is straight down 4.5%. As it should be, 148 odd rupees or so. Union Bank is down 3%, 112, 113 rupees. Allahabad Bank is down 2.25. Central Bank will come up on your screen. That reported earnings as well. So that's down 3.5%. Then let's look at IGL. Indraprastha Gas reported numbers. Now these are numbers which we will not be able to put out to you, but we will in a bit. IGL 1.3 odd % higher. Volumes are pretty steady for IGL, sales volumes. Oud Sugar, just a few names I want to run through. Reported strong numbers. I think it's in the BSE, so we'll put it up later. Philips Carbon reported earnings. Maybe we could put that up. Again, strong numbers, Philips Carbon. Capital First reported strong numbers. Again, that'll come up. Taj GVK reported strong numbers. We have a company called Nilkamal, which reported earnings. Taj GVK is up 7%. There's Nilkamal. United Breweries reported earnings. I think UBL numbers were poor. United Breweries, that's a beer company. Zuari Agro reported earnings, and Poly Medicure reported earnings. They were very small companies, but just running through what came out. Zuari Agro is down about 5.5%. I think UBL was flat, and Poly is up about 5.5% as well. Okay, 50 points on the Sensex, and the Nifty is up, 10 points, maybe? A little around there. SBI is down 1.8. So what do these numbers mean for SBI, which will report end May? I think that will be interesting to kind of note as well, how maybe expectations for stressed assets, etc., go higher. We'll watch out. Idea is absolutely flat. There are some reports about Idea, I think, wanting to buy Telenor's business in the country. HDFC Limited is up 0.33%. Bharti is down about 0.6%. Asian Paints is up about 0.7%. That's about 950. Infosys is up about 0.5%. ONGC is up 0.33%. You got Yes Bank down 0.13%. Reliance Industries is absolutely flat. Aurobindo Pharma is up 0.4%. And Sun Pharma, etc., etc. It's mostly all flat. HUL is meaningfully lower now, about 11-12 rupees lower, 1.5%, 820 on HUL. Crompton Consumer, 140 now. They'll do 5 rupees in earnings in financial year 17, and many have said that it should trade at the same multiple, 35 times PE as Havells. But it's already done well. I mean, I think 7% on Friday and about 3 today as well. So that is Crompton Consumer. Electro Steel is up 11%, 3.5 rupees. L&T is up about a quarter. Cipla is down 0.5%. Nifty is now in the green. It's absolutely flat though. And all the results are at the bottom of your screen. I think BOB is down about 5.5% or so. Yeah, it is. So 146, 147 or so. HUL is down 1.7. SBI is down 1.6. Bharti, Hero, ICICI, etc. are the other stocks which are in the red at this point. 30 up, 20, 21 lower. That's the tally. Dr. Reddy's is up strongly. It's up 2.8%. So it's at about 3,000 rupees. So numbers came out. Stock was at about 2850. From 2850, it's moved up to 3,000 in 2 or 3 days flat. Tata Motors is up 1.25. Adani is up 1%. Adani is still 190 though. Z is up 0.9%. Aurobindo Pharma is up about 0.6% as well. Okay, Choga, any other stocks, any other results you think worth discussing?
I mean, haven't come across any great results actually. A lot of mid-caps are yet to post the results. I can talk on the expectation of results, but otherwise, last 1 week was dominated by the PSU banks, which nothing I could find exciting.
Yeah, so a lot of the volume numbers, many have said that volume numbers for some of the consumer companies have looked up, right? We've discussed this in the past as well. Imami, Marico, Dabur, look at V-Guard volume numbers, or Kajaria Ceramics, Serra Sanitary Ware. A lot of these companies, 10, 11, 12, 13% volume growth. And many have looked at those volume numbers and said that we've seen a significant turn.
I don't agree. Whatever names you mentioned, they are probably outperformer within the industry. But the industry.
I'm not asking whether they should be bought or no. I'm saying, what do these volume numbers?
I would not buy.
Because I heard an interesting theory from someone on Friday. So the theory is that January to March, you had a lot of auspicious wedding dates. So maybe, and May and June, there is a complete dearth of any auspicious wedding dates according to the Hindu calendar.
That is true. And,
so,
yeah.
I don't know. I mean, that's the first I heard.
Partly that is also true. And secondly, particularly the segments where, the FMCG companies use a derivative.
Look at the paint volume numbers. Paint company, Asian Paints, right? 14% rural volume growth. Hero's number, Hero Motocorp's numbers. I mean, these are, maybe there is a connection. One doesn't know.
But certainly,
But if that is true, if that is essentially purely the big reason for these strong numbers, then it will fade in the coming months.
Definitely. For one more reason that, if you talked about Asian Paints, if you see overall, the incremental PBIT is less than the fall in the raw material cost. Now, we have seen, February, March, the strong rebound in oil prices. So, in June and September quarter, I am expecting, the margin to get eroded for most of these companies which use, derivatives of oil. So, therefore, for many of the companies, this is the right time to book profits, in my view.
Hemindra, any results which you came across interesting? Any trends?
I must share Choka's view. Nothing much interesting is happening. I would just like to point out that, you're seeing, as you said, this consumer growth happening. It's very interesting because recent studies have shown that in rural India, real wages have actually declined, which tells you that what is the prospect of future demand in rural India. So the question being is this type of growth that you're seeing in some of these companies?
No, this is what I'm saying. If it is because of the wedding thing, then it is not sustainable.
Yeah, that is my apprehension, that, you always get these little bubbles, and people interpret these bubbles historically as green shoots, which will lead to a broader economic recovery. And that never happens, because whatever green shoots are in one sector, in one company, it tends to wither out very quickly, and immediately some other green shoot shoots up. So therefore people focus on that. But the end result, what we have seen in the last 5 years, is that this has not led to any broad-based economic recovery. And really we are, unfortunately, it looks like we are in a period of secular stagnation.
There are some particularly cringe-worthy market terminologies. One of them is green shoots. At least I cringe. The other is the oft-repeated quote, sell in May and go away, which one hears at the beginning of every May, every year.
Every year you see earnings growth for the market at between 15 to 17%. And by the year end, it comes down to either it's flat or just some 2 or 3% growth.
Yeah, absolutely. Crompton Consumer, Choka, did we discuss this one?
No, I haven't discussed, but I am more comfortable with the Crompton Greaves Engineering Company.
Okay.
I feel that that has a little more potential than the consumer.
Okay. But, have you looked at the consumer business? Have you looked at the numbers, etc.?
Yeah, I looked at it.
Actually, it's bigger than Havells. 3,200 crores revenues. Havells does 3,000 crores. I'm talking about financially 15 numbers.
After this run-up, it's in price. The valuation is not that cheap. So
Havells trades at 35. This still is available at under 30, 26, 27 times.
So some of these have to do with the low floating stock. So that's why they sustain the high valuation.
Right.
But we have seen a lot of inconsistency even in Havells stock price as well as performance. So that way, I don't think Crompton Consumer would have that kind of inconsistency. Still, it could be a preferred one to Havells. But I think Havells also should correct significantly.
Do we have that MSCI table? If we do, can we please put it up quickly? The additions. I think Havells moved up significantly on Friday. At least till mid-afternoon, when I looked at it, it was up strongly. And the reason was nothing but the fact that Havells has been included in the MSCI India index from the 31st of this month. And there is a large passive inflow, some $60-80 million or so, which would need to come in to adjust for the weight. So 360 on Havells, 5% higher on Friday, and shooting up again. If you can put the other stocks up as well, there you go. So this is the expectation from Morgan Stanley in terms of how much passive inflow needs to come in. So Tata Motors' weight has gone up, and $200 million. Yes Bank, Havells, NTPC, Titan. These are essentially all the stocks, and there are some outflows as well, some weight decrease or stocks being kicked out of the index on your screen. HUL, Bharti, Infi. Actually, I think Bharti also saw some selling. The market was, of course, pretty weak. Bharti was down about 2% on Friday. HDFC, United Breweries, etc. as well are there in that list. So again, till the time the changes take effect, maybe on days you'd see some moves here and there. Dr. Reddy's is up 2.7% now. It's followed by Tech Mahindra and Z. DRL, any thoughts? The numbers came out.
Yeah, it's going through a little stress, but I remain positive for medium to long term. I am sure, considering the management quality, they would be able to come out of this stress. And definitely for medium to long term investors, it's a hold. And if there is any decline below 3,000, one can accumulate also. That's our view.
Tech Mahindra, 490.
Maybe a long term investor can hold it. But I would still prefer a mid-sized IT company. As I've been saying, the consolidation would continue because the large companies are not able to grow in double digit in dollar term. So therefore, my preference is still for mid-sized IT companies. Of course, I would still buy stocks like Mphasis and Polaris, although they have joined the consolidation process already, but they have corrected a lot from the recent peak prices. They give me a lot of valuation comfort. Like in Mphasis, you have a downside bottom also, slightly close to the offer price. So in the short term, there is a lot of...
the company which changed hands recently.
BlackRock has taken over. Okay. It went to 520. From there, it has now come closer to the offer price. So therefore, downside, you have a lot of cushion in the short term. In the medium to long term, with the new management, with the commitment of HP to give the business, I feel it can easily go above 500 in the short to medium term.
Okay. I think Pankaj is pointing out that Bank of Baroda is down 7% now, if you can put the stock up. So it's, as I said, it's up 36-40% from the February lows. So, it's outperformed the Bank Nifty by some 20%. And then you get numbers like this. So, you get a bit of a sell-off. So that's what we're getting right now, 7.5 lower now. SBI is right behind it, 2.5%, 180. So we should expect SBI to be a washout? Hemindra?
See, it all depends, because so far SBI has been resisting what some of these large PSU banks have been reporting. And if you see even SBI's infrastructure portfolio, it keeps increasing. While others, you see, there is a clear stagnation coming in the infra portfolio of other large PSU banks. So I think one has to wait and see, because, SBI to me tends to have positively surprised so far, at least on their asset quality. And we really have to see in fourth quarter what kind of numbers they report. Because the underlying economy, as a lot of these bank numbers show, is really going nowhere. Asset quality is coming out worse than analyst expectations. There is higher provisioning, which analysts had been underestimating. There is more stress asset, which banks are giving out, as a pipeline in future quarters. So all three really are coming as, negative surprises to analysts so far. So this is what is causing the big concern on a lot of banking stocks.
Yeah, absolutely. So that is State Bank of India. Did you, Hemindra, look at the trade deficit numbers?
Yeah, from what I understand is that your exports are down and, everything appears to be down, which again tells you that your global growth is going nowhere. And even on your domestic, if you see the non-oil imports, that also doesn't seem to be very promising. And that again is reflected in your very weak IIP numbers as well.
Weak demand overall.
So the overall, and this has been my main thesis on why I do not see growth picking up, is that globally there is weak demand. And, if you keep continuing this policy of fiscal contraction and tight monetary policy, it is going to make your situation worse. And this is all indications are that these two strategies are going to continue in India, which tells me that really one cannot expect any broad-based economic recovery at all.
So the conclusion being made by many is that so oil imports rose, prices went up. Gold imports were flattish, but capital goods imports, and which were holding up over the last couple of months, they've all contracted very sharply. So it paints to a very gloomy picture, domestic picture, demand picture. But they also, some have said that it's essentially could be related to import restrictions in many areas, etc. That could be one reason why the April numbers look so bad.
Yeah, but you have to also see how your domestic IIP is doing. Your domestic IIP is going nowhere. Where is your bank credit going? Your bank credit again is flat. It's just barely struggling to do 2 digits as a percentage growth. So the other broad-based indicators are not showing you any kind of hope. And that is my main point. You may look at certain sectors like two-wheeler and say, oh, that is doing very well. But unfortunately, it is not being broad-based or does not lead to a broad-based recovery so far.
The inflation numbers also sort of spiking up a little bit, Hemindra?
You see, now the issue here is this. With RBI's tight monetary policy, it is not going to, if your inflation is going to come from commodities and food, which is a global phenomena, there's no way an RBI's interest rate policy can control that. And even the CPI which came down, it is not to the credit of the Reserve Bank of India, which some people are now arguing that, oh, look at how, inflation has been brought under control. The bulk of the inflation which came down is attributed to global commodity prices, which was also reflected in a lot of companies, as Stoker said, which increased their profit margins because of lower input costs. And now when some of the commodity prices are going up, inflation is bound to go up. But my basic point is when you've got cost push factors, there is no way monetary policy can control it. So that is what is relevant. But the policy of the monetarists has always been, they do not care where that inflation comes from. Is it demand, pull or cost push? They just say you have to keep your monetary policy very tight. Now, the whole basis of this argument, according to Governor Raj and other people from that school of thought, is that by keeping a tight monetary and tight fiscal policy, you're going to give a very solid foundation for future growth, because then you have killed inflation. Unfortunately, according to me, you'll give a very solid, very robust foundation for a very deep economic slowdown by such policies.
The debate around Dr. Rajan's extension also kind of heating up, right? I don't know if the government is debating it, but everyone else is.
Normally, whenever there is some, member of the government or the ruling party, tends to have some critical comments on Governor Rajan, immediately you'll find a very well orchestrated campaign, invariably led by a foreign brokerage house or a foreign entity, which says, oh, he's such a great thing for the Indian economy, for foreign capital. Now, he has a very, very strong support of foreign capital and of the capital markets. It is very rare to find any criticism of his policies in the business media, because everyone linked to the capital markets, linked to the foreign capital, believes that this keeping a tight monetary policy and the tight fiscal policy is the route to high growth. Now, we have been having this policy, we've been seeing high real rates of interest, mind you, which was the earlier argument that capex is not picking up because the real rate of interest was negative. Now, we've been having high real rates of interest, but capex is not going anywhere.
But his basic argument has been inflation, right? Not his basic aim is not to boost capex. That is what the government has been trying to do.
But it is linked. You see, the point is that they link everything together. They even link it to the fiscal deficit.
Yeah. So, but they link it when asked the question, wouldn't it hurt capex? Wouldn't tight monetary policy hurt capex, etc.? So then in response to that, that gets defended in a certain way. But the primary argument has been inflation. And you'd made your point that you think it's largely all global commodity prices coming off rather than...
See, if the inflation is a demand pull inflation, that means the economy is overheating up. Therefore, you have very high sales growth in companies. Then, by keeping a tight monetary policy, I can appreciate that argument. That can, control that type of inflation. But the inflation that we've had has really got to do with commodity and other cost push factors, which, in my opinion, there's no way interest rates can tackle that situation.
Choga, some of the stocks, so RSWM had a large move on Friday, on Thursday, beg your pardon. Friday it actually came off a little bit. Actually, let's put these stocks up. These are Choka's favorites. RSWM, if we can, EIL, that's Engineers India Limited. We could put up JB Chemicals, there's Barmer Lorry, there's KCP, Biocon, some of these stocks.
Yeah, we are holding Biocon, to be fair. I won't advise buy on this, but certainly those who have bought can hold on. Certainly above 700 target one can achieve. But other stocks I am buying even today. Among all the stocks you have mentioned, RSWM saw some kind of profit booking on Friday. And at the current price, once again, it is trading at a little above 7 PE. I remain very bullish on RSWM. And particularly KCP Limited. Because they have got a very successful sugar business in Vietnam. And I'm expecting, excellent results from the sugar segment. They normally publish only the consolidated results only in March quarter. So that would give us, very impressive number on sugar segment. So that stock also corrected a little more than 20% in the last few months. This is on a strong buy among all these, followed by stocks like Engineers India, Barmer Lorry, and JB Chemical. We started accumulating aggressively from last week, Emphasis also. Again, dividend yield is very strong. And also there was a market expectation that there could be some special dividend from Emphasis. I do believe in it because, the new promoters are basically investors. And they can definitely take back 1/5 of their investment if they decide to declare special dividend, because the company is sitting on more than 100 rupees per share. So using that logic, I am buying quite aggressively Emphasis. So all these remain a top pick at present.
Hemindra, do you think election results, will have state election results shortly, will make a difference to the market?
Well, I think so, yes, because, if it shows that the electorate is confident about the central government and the BJP, and the BJP makes strong inroads, then the market will interpret that as a very positive for reform. And, the converse also will be there, that if the BJP does poorly, then the market believes that, to quote, populist, unquote, policies will be followed by the BJP, which will be negative for the market. So I think it will have a, bearing. Unfortunately, the setback that the BJP has received in Bihar and Delhi is showing some concern. So So we just have to wait and see how the BJP does in these states.
Any thoughts, Choga?
Election, I have a different view. I don't think this election will have any impact for central government because Tamil Nadu, Kerala, anyhow, BJP is not there in a big way and already lost out in Bengal. And in my political analysis, there is not going to be any improvement in southern part of our country. So it's not, even if there is any impact, it will be there for only one day. Because next 3 years, the central government has got a thumping majority. So these state elections, will have only impact for 1 or 2 days. Again, after that, it will be forgotten.
We have exit poll results. I don't know if they'll be published or not, but exit polls are today. So today the state elections end and exit polls are going to be, I think, out. And election results themselves only come out on the 19th of May, that is Thursday. Maybe stocks like Sun TV, etc., right?
Yeah,
I mean, they could be specific.
Last time, people who believe in tactical opportunity can buy Sun TV.
It's only up 8% last 4 days. I was looking at the price.
Yeah.
But most of that move, one assumes, is Z results related because it started after the Z numbers came out very strong.
What happens, they have the movie division.
Yeah.
So factually speaking, the movie division does well whenever, the DMK party wins. So therefore, also the PV multiple improves. That's what happened 2009 May when election results came and market hit the circuit breaker. Many people did not notice Sun TV, which in fact from that day it doubled after the election results. I am not expecting such a phenomenal return, definitely. Tactically, one can expect 10-15% if the election results are favorable to them.
Hemindra, you want to add a point?
Yeah, just the thing that while it's true that BJP has a significant majority in the Lok Sabha, what we've seen that a lot of their reform laws have got stuck in the Rajya Sabha. Now the thing is, if they do well in some of the concern is that, the BJP should increase its strength in the Rajya Sabha. So if they do poorly in these states, then the quagmire of getting any laws passed is going to be more and more difficult because, BJP really truly dominates in the Lok Sabha, but they are unable to make any progress in the Rajya Sabha. And for a lot of your reform laws to be passed, it requires the support of the Rajya Sabha as well.
Yeah, absolutely. We'll take a quick break, gentlemen. Thank you very much, both of you, for coming in. Appreciate your time.